Good morning. Welcome for today's webinar on annual returns under GST. So, continuing our series on GST. Last week we saw GSTR1, the returns, the monthly and quarterly returns which needs to be filed. However, like how we have tax audits and tax filings and tax returns under income tax, the same under GST, we have annual returns. So today's focus would be more on annual returns. That is Form GST 9. There's one more form GST 9C, which relates to form relevant for the purpose of dealers who are required to get their accounts audited. But today's focus would be more on Form 9. So let's get started, friends. Before that, would like to acknowledge the efforts of Harish and Thirumal for making this presentation ready. Legends used B2B business to business, B2C business to consumer, CTP casual taxation person, ISD input service distributor, says special economic zone. Schema for the day, the introduction, the annual return, which section under GST Act governs the annual return, the types of forms, relevant considerations and consequences of failure to submit the annual return, and a detailed analysis of GSTR 9. Again, a value-added tax (GST) is a value-added tax levied at all points in the supply chain, wherein like credit is available for whatever tax is paid in the earlier chain while making the payment to for current chain of a transaction. To ensure correctness and veracity of the reported information, annual return and GST audit are required. When GST principles embrace information technology, reduce the interaction with the tax administrators. So again, the annual returns are online returns. There are no physical submission of document which needs to be made for the purpose of filing annual returns. All entities having GST registration, except few specified categories of persons, are required to file GST annual return for every financial year, irrespective of the turnover. So there is no turnover criteria, friends, for filing GST return. Once GST number has been taken, if you are not falling within the specified category of persons, then you have to mandatorily file the GSTR 9, that is the annual return. Every registered person, that is section 44, apart from input service distributor, again we have seen in our earlier webinars as well, input service distributor is services availed by head office and then again charged to branches or similar kind of arrangements. Person paying tax under section 51 or 52, 51 relating to deduction of TDS, that is TDS, and 52 pertains to collection of tax. Casual taxation taxable person, non-resident taxable person. So every registered person apart from these specified categories has to mandatorily file annual return for every year on or before 31st of December following the end of such financial year. So if for 17-18 it has to be filed by 31st December 19. For 18-19 it has to be filed by 31st December 2020. However, there has been some changes as this was introduced for the first time. There have been revision in the dates and the due dates has been extended considering the level of work involved and the portal interface as well. So every registered person who is required to get his accounts audited shall file. So along with annual return, you have to, along with GSTR 9, you have to file GSTR 9C, which is again a copy of audit, which would focus more mainly on the reconciliation statement and other aspects of audit. When audit is applicable, when your turnover exceeds 2 crores, so that is where you are liable for audit, friends. Type of form, as we have seen, GSTR 9 to be filed by regular taxpayer registered under GST. 9A again talks about GST's composition scheme. So if composition taxpayer the people who have opted for or the dealer who have opted for composition scheme needs to file their returns or annual returns in GSTR 9A, 9B by e-commerce operators who have to collect tax during the financial year, 9C again the along with annual return if a person is liable for audit, they have to additionally file GSTR 9C. Relevant consideration, even though as said friends, even no turnover exceeding, no transactions as well. Once GST number has been taken, a nil annual return has to be filed. Even though there were no transactions in the entire year, a registered person who has opted in or opted out of composition is required to file both 9 as well as 9A. So, in case you opted for composition scheme and during there is change, you opted out of that, or you were not opting composition scheme and during there has been again opting of composition. So, in that scenario, GSTR 9 as well as GSTR 9A both needs to be filed. GSTR 9 does not allow any revision after filing. It is mandatory to file GSTR 1 and 3B for the 17-18 before filing annual return. So again, these forms are mandatory. That is GSTR 1 and 3B. We've seen in our earlier webinar as well. These are like summarized details of the transactions which we enter on a monthly or a quarterly basis. Consequences: notice to defaulter. So again, within 15 days, if GST annual return is not filed within 15 days, we need to file our notice would be issued by the GST department. Late fee it would be levied at rupees 100 per day under CGST Act and 100 per day under SGST or UTGST Act, subject to a maximum amount of 0.5% of the turnover. So 200 per day, subject to 0.5% of the turnover would be the late fee. Friends, this is late fee, this is not the penalty, friends. Penalty which may extend up to rupees 75,000, rupees 25,000 under CGST, SGST, and IGST Act in case there is default in filing annual return. Now, analysis of GSTR 9. There are six parts to GSTR 9, friends. Part 1 consists of the basic details. Part 2 about the outward and inward supplies made during the financial year. Part 3 details of the ITC, that is the input tax credit claimed or details about that for the financial year. Part 4 about the taxes paid as declared in return files. Part 5 specifically deals for amendment details of amendment which are made subsequently after the year end. We'll see in detail what these part contains. Part 6 particulars of demands and refunds. So part 1 contains the basic details, friends, the financial year for which the annual return is being filed. Friends, in every part there would be a different table. Table number would be given. So accordingly, we will see for each and every part what are the relevant table numbers and what each and every table says in terms of details being asked. So in basic details, the financial year, the GST number and the legal name and the trade name. GST once we log in and once we click on annual return, automatically the GST number and the legal and trade name gets auto populated. Details of outward supply and inward supply. So here we have to give details of all outward supplies and inward supplies during the financial year on which tax is payable. So on all the supplies on which tax is payable, we need to mention those details, be it inward or outward supplies. What are the various categories? Supplies made to unregistered persons, that is B2C. Supplies made to registered persons, that is B2B. Zero rated supply, that is export on payment of tax, except supplies to sales on payment of tax. Deemed export, what is the meaning of deemed export? We have seen earlier as well, friends. Supplies which do not leave India and the payment of for such supplies received either in Indian rupees or convertible foreign exchange if such goods are manufactured in India. Sorry. Advance on which tax has been paid but an invoice has not been issued under not covered under A to E, whatever we have seen earlier. Inward supplies on which tax is to be paid on reverse charge basis. Credit notes, again in case of sales return, in respect of transactions which are covered from B to E. Debit notes, in case of purchase returns. Supplied or tax declared through amendments. Amendments meaning returns. So amendments, what is the meaning of amendments? Wherein like for a particular return we have put in some detail and there has to be some correction. So we need not revise that return, but we rectify that in subsequent period returns. So say for example there was a shortfall of 20 as sales which was not declared in the month of January. So we do not revise the return of January, but in February we add that 20 and then file the return of February. So if there are supplies and taxes declared through amendments that needs to be declared in table for column K. Column I, supplies or tax reduced through amendments. Same case, if at all that's a purchase transaction, automatically it will get reflected in I. N, supplies and advance on which tax is to be paid, H plus M above. So column H and M are subtotals of these details, and whatever supplies or advance on which tax is to be paid, aggregate amount will come in column N. Table 5 relating to outward supplies made during the financial year on which tax is not payable. So here we have seen friends on which tax is payable. The wordings which I use are tax is payable. So here it is not tax which is actually paid, but even though if at all there is a transaction on which tax is payable, that also will get covered. In table 5, transaction on which or supplies on which tax is not payable. So that contains A to N, zero rated supply without payment of tax, supply to sales without payment of tax, suppliers on which tax is to be paid by recipient on reverse charge basis, exempted supply, nil rated supply, nil rated meaning the rate of duty or rate of GST is 0%. Non GST supply includes no supply as well, the subtotal from A to F. Credit notes issued in respect of transactions referred to A to F, debit notes for the transactions referred in A to F, supplies declared through amendments, reduced through amendments, turnover on which tax is not to be paid, and total turnover. So whatever we have seen in table 4 more or less similar, but without payment of taxes. If there are supplies made, those details will come in table 5. Details of ITC as declared in returns filed during the financial year. So under this table, friends, all the ITC, that is input tax credit, which are availed during the financial year are to be reported. It contains various columns like total ITC availed through form GSTR 3B, sum total of table 4A of form GSTR 3B for the entire year. Inward supplies other than imports and inward supplies liable to reverse charge, but it includes services received from cess. So what all inward supplies on which, apart from imports and inward supplies on which reverse charge is applicable, all those inward supplies needs to be mentioned here. Inward supply received from unregistered persons liable to reverse charge other than B above on which tax is to be paid and ITC availed. Inward supply received from registered persons liable to reverse charge other than B above on which tax is paid and ITC is availed. So B is inward supplies other than imports and reverse charge. C is inward supplies on reverse charge basis from unregistered persons. D is inward supplies on reverse charge from registered persons. E, import of goods including supplies from cess. F, import of services excluding inward supplies from cess. Input tax credit received from ISD, that is input service distributor. Amount of ITC reclaimed other than B under. So in case there are under other provisions of the Act, we are able to claim certain ITC which is not forming part of B, that is inward supplies. Those will be mentioned here in column H. Transition credit through Tran 1, Tran 1 and Tran 2. So Tran 1 is like taxes paid in previous regime available in returns, and we have documentary evidence of that. Credit for which is carry forward now. Tran 2, again same, but for which it is not available in any of the relevant returns, be it excise or service tax, and also for which there is no specific documentary evidence. So that will form under Tran 2. So any credit which has been considered from Tran 1 or Tran 2 will needs to be reported here. Any other ITC availed but not specified above, total ITC availed. So from A to M, the total ITC will fall under column O. Table 7, details of ITC reverse and ineligible ITC for the financial year. So whenever ITC needs to be reversed or out of the entire ITC, some component would be ineligible. That details we need to mention here. As per Rule 37, Rule 37 speaks about procedures when any person who has availed ITC on any inward supply of goods or services or both but fails to pay. So after availing that ITC, there is no payment being made. So that has to be reversed as per Rule 37. As per Rule 39, procedure for distribution of ITC by ISD. Rule 42, manner of determination of ITC in respect of inputs or input service and reversal thereof. So here as well, as per Rule 42, in case some inputs or input tax on goods or services or reversal to be made, that needs to be mentioned here in Rule 42. Rule 43, procedure for calculating input tax and reversal of capital goods. So on capital goods, if there is some reversal, so out of the entire 100%, say only 20% is available and 80% is not allowed, that reversal would be made in column D in table 7. As per 17, 5 ITC which are ineligible, say ITC availed on some personal expenditure of a director of a company, so that would not be allowed as credit. Reversal of Tran 1 credit, as we have seen earlier, what is Tran 1 credit? Reversal of Tran 2 credit. Other reversals, if in case if there are not, if which is not falling part from A to G, will come under H. Total of ITC reward, that is sum of A to H. Net ITC available for utilization 6O. So table number 6, column O, total ITC available minus 7I, total ITC reward, that is table 7, column number I, net ITC available for utilization. So that is what is available for the purpose of taking credit against the GST to be paid for the entire year. Also, transfer of taxes paid under earlier tax return would flow under GST revenue through this self-declaration. So when you are filing Tran 1 and Tran 2, automatically the reversal, if any, would fall under table number 7F and G respectively for Tran 1 and Tran 2, and the balance would be allowed as credit. Table 8, other ITC related information. ITC as per GSTR 2A. So it's an auto fill. So this need not be filed by anyone, but uh, for a dealer, it will be auto populated. So whatever purchase, eligible purchases he has made, the credit or details of that will come into GSTR 2A. So ITC as per GSTR 2A. ITC as per sum total 6B and H above, that is the one which we have seen in table number 6, the details of ITC. ITC on inward supplies liable to reverse charge but includes services from. So ITC on inward supplies other than imports and inward supplies liable for reverse charge. So all the inward supplies apart from import and reverse charge. So that needs to be detailed here. Difference would be A minus B plus C. So we have to add B, that is sum total of 6B and H, plus C, that is ITC on inward supplies. All needs to be added, and then you have to reduce this from ITC as per GSTR 2A. That is the auto populated figure in case for whatever purchases or services we have availed, that details or the GST for that detail would get populated in 2A. The difference would be D. This figure can be negative. So in case we have claimed more than what is being shown in GST at 2A, the result would be negative. It can be positive as well or negative as the case may be. E, ITC available but not availed. ITC available but ineligible. So ineligible ITC needs to be mentioned in column F. IGST paid on import of goods including supplies from CIS. IGST credit availed on import of goods as per 6E above. We have seen in table number 6, column E. Difference G and H. ITC available but not available on import of goods equal to I, that is whatever ITC is available on import of goods, that would be restricted to column I, friends. So what is I? IGST paid on import of goods minus IGST credit availed on import of goods. So that is what is the difference. That is what is difference. So the difference amount would be available for the purpose of taking credit. So ITC available, but in case if at all it is available more than that, the balance would lapse and only equal to the I amount, that is the difference between the GST, IGST actually paid and actually credit availed of, that would be available for the purpose of taking credit, and the balance would get lapsed, which would form part of the K column, that is E plus F plus J. E is again ITC available but not availed. F would be ITC available but ineligible. In case of IGST, only to the extent of the import of goods and less the credit avail, that would be available as credit. The balance will get lapsed. Part 4, actual tax paid. Here, the details of tax, interest, late fee, penalty, and other amounts payable and paid thereon on a cumulative basis for the financial year needs to be mentioned. And again, there has to be a segregation in terms of IGST, CGST, SGST, cess, interest, late fee, penalty, and others, paid through cash or challan or paid through ITC. Both bifurcation needs to be mentioned here in this column, part 4. Part 5, details of amendment made in relevant reporting year. So here we have to mention details of supplies or tax declared through amendments, net of debit notes, net of reduced through amendments, net of credit notes. As we have seen, friends, through amend supplies through amendments, that is increased or decreased through amendments. Meaning, if in case a sale which has to be for a current month, which was not reported in current month, but subsequently in the next month it is getting reported. So those details would form part of part 5, table number part 5, column number 10 and 11. Additional invoices related to the relevant year but reported in the subsequent years, GSTR 3B returns. So here I give an example of change of month, but even though there is change of year as well, those would get form part of uh, uh, column number 10 and column number 11. Debit notes dated before March 31st of relevant year, omitted and reported in subsequent returns. Amendments to invoices related to relevant year and reported with errors in GSTR 3B of that year, but now reported in the returns of next year. So these three things would fall under point number 10. Point number 11, it would be credit notes dated before 31st March of relevant but reported in subsequent year's return. So it is pertaining to a year, but it is reported in subsequent year return. Those details would form part of annual return of the previous year, that is the last year. Amendments to invoices related to relevant year and reported in the GSTR 3B of that year, but now reported in the returns of next year. So here it is in this scenario, whatever is pertaining to current year, but for some reason it was not reported in current year and it is getting reported in next year. Those details, be it sales or purchases, net of debit notes or credit notes, needs to be mentioned here in part 5. Differential tax paid on account of declaration in 10 and 11 above. So because of these declarations, that is supplies reduced or declared through amendments, if there is any tax which needs to be paid, that would be paid, or that detail would come in column number 14. Consolidated value of differential tax liability self-assessed and discharged in subsequent monthly returns filed. As we have seen, accordingly, the taxes which needs to be paid, that would be regarded as amount to be paid for the purpose of supplies declared or reduced through amendments. Reversal of ITC availed during previous financial year. ITC availed for the previous financial year. Reversal here contains the summary of ITC to be reversed, but that was availed during the reporting financial year. The data to be tabulated relates to the input that was taken in the reporting financial and reversed during subsequent year. The reversal may be for various reasons like erroneously taken credit or failure to make payments within the stipulated time. So ITC considered in a year, but subsequently in the next financial year it is being reversed. Those details will fall part in would form part of point number 12. In point number 13, details of ITC for goods or services received in the previous financial year, but ITC for the same was availed in the subsequent returns. So you have an invoice of current financial year, but you have not taken the credit of that in the current financial year, but have taken in the next financial year. Those details will form part of point number 13. Part 6, other information, particulars of refund of taxes and demand of taxes for the relevant financial year. Total refund claim, total refund sanction, total refund rejected, pending, demand of tax, taxes paid in respect of E above, demands pending out of E above. So here in this part, friends, table number 15, we have to mention about what are the refunds for which we have made an application, how much has been sanctioned, how much has been rejected, and how much is still pending. Same way for demand as well. In case there is some demand to be demand notice has been issued and there is demand taxes which are still pending to be paid. Out of that, how much has been paid, how much is still pending. The aggregate value of refund of taxes claimed under GST law during the year has to be reported under this head. So the aggregate value of refund of taxes during the year. So it is whatever has been filed as an application for refund during the year has to be reported. It may be relating to current year, it may be relating to previous year as well. Whatever applications made during the year has to be reported here. Aggregate value of demands of tax for which an order confirming the demand has been issued by the adjudicating authority shall be declared here. So be it relevant for financial year or be it for previous year as well, all those detail needs to be mentioned here. Scenarios for claim of refund, when the refund would be would get generated. Refund of taxes paid in excess. Refund of balance in the cash ledger after payment of taxes. So once we have paid the taxes in our cash ledger, still some amount is reflecting, that can be claimed as a refund. Refund of unutilized ITC in case of zero rated supplies of goods and services without payment of tax. That is also one scenario wherein the refund will get generated. In case of zero rated supplies of goods and services with payment of taxes, refund of taxes paid on account of deemed exports. So on export generally there is no GST, but in case there is some taxes which has been paid, that can be claimed as a refund. Refund of taxes paid on account of supply of goods made to CES. Again, for CES unit and developer, there is no GST, friends. So in case there is some taxes being paid on supply to these units, that can be claimed as a refund. Refund of unutilized ITC on account of inverted duty structure. Refund of pre-deposit. So whatever pre-deposit of taxes which has been made after adjustment, subsequent adjustment in terms of taxes to be paid, the balance can be claimed as a refund. Table number 16, supplies received from composition taxpayers, deemed supply under section 143, goods sent on approval basis but not returned. So here we have to give details about supplies received from composition taxpayers, that is people who have opted for composition tax scheme. Deemed supply under section 143, what it refers to, inputs and capital goods supplied by the principal to the job worker and not returned within the time specified. 1 year is for inputs and 3 years for capital goods. So here you are sending any goods or capital goods as the case may be for the purpose of job work, and that has been not returned by the job worker to the principal within the stipulated time. So stipulated time for inputs, that is normal goods, is 1 year. For capital goods it's 3 years. So if there are goods which are pending with the job worker, those details would form part of table number 16, column number B. Supplies made on approval basis and no invoice is raised or goods returned to the supplier within 180 days. So you have sent goods on approval under GST law within 180 days, either the goods, and if no sales is getting fructified, within 180 days the goods needs to be returned to the supplier or the GST has to be paid. If there are situations wherein like the goods are not written and GST also not being made, those details would form part of column C, table number 16. Table number 17 and 18, HSN wise summary of outward supplies and inward supplies. As we have seen, friends, HSN summary is harmonized system of nomenclature which classifies goods and services in a uniform code, and it's a universally accepted code, friends. It's not pertaining only to India but accepted across the globe. So here in this table 17 and 18, we need to give HSN wise summary of outward supplies in table 17, inward supplies in table 18. Summary of supplies effected and received against a particular HSN code to be reported in this table. It will be optional for taxpayers having annual turnover up to rupees 1.5 crores. So up to 1.5 crores, there is no compulsion of mentioning HSN or providing these details. Mandatory at two-digit levels. So it's a HSN code is a four-digit HSN code for every goods and services. Up to two-digit, it would be mandatory in case your turnover exceeds in the preceding year above 1.5 crore, but up to 5 crores. So 1.5 to 5 crores, two-digit code needs to be provided. Mandatory for four-digit code above 5 crores. In case your turnover in preceding year exceeds 5 crores, HSN code needs to be reported at four-digit level. UQC details to be furnished for supply of goods. UQC stands for Unique Quantity Code. It's a unit of measurement such as a kilogram of which has to be mentioned. UQC as per customs is followed. So under GST, UQC as per custom needs to be followed. For example, quantity cubic meter type volume UQC code would be CBM, that is cubic meter, which the code for that would be CBM. Cubic centimeter type is volume, the UQC code would be CCM. Quantity being centimeter, type is length, the UQC code would be CMS. So customs would provide a UQC code for each and every supply. Again, which needs to be mentioned in the invoice or in the annual returns when we are filing this. So these were some of the thoughts, friends, on the annual returns under GST. Next week we will focus on GSTR 9C when the books of accounts needs to be audited. What are the additional things we need to see while filing GSTR 9C? Any questions would be happy to answer. So there's a question. One person has registration in two states, but one state has turnover exceeding 2 crores. Do I need to file GST 9 for both? Again, uh, as I said, friends, earlier as well, GST uh, registration is state specific. So your GST number changes in case there is a change of state. So for the state, where you have the turnover exceeding 2 crores, you need to file GSTR, that is GST 9 or GSTR 9C, the annual. Filing 9 is mandatory for both, as we have seen. Once you take GST registration, GSTR 9 is mandatory irrespective of turnover. I guess your query pertains to the audit of that is GSTR 9C. That would be applicable only for the registration wherein your turnover is exceeding 2 crores and not on both. So it is not like our income tax wherein like you have two business and automatically you are proprietor of two business, one business having turnover exceeding the threshold limit. So the entire accounts gets audited. Nothing like that in GST. Turnover in VAT and GST together is 2.03 crores. Do I need to file GST 9? Uh, you are asking for GST 9 or 9C, because 9, as I said, irrespective of turnover, you have to file annual return, that is GSTR 9. So your question pertains to GSTR 9 or 9C. Okay, and what do you mean by turnover in VAT and GST together? So when the 2 crores criteria has been given, that is mentioned under GST. So, in case you have sales in VAT of 20 lakhs and balance. So I believe 1.8 would be in GST. The turnover definition, if you see, it talks about turnover that is supplies on which GST is leviable. So this does not talk about any of the erstwhile regime, that is VAT or excise or service tax, as the case may be. So in that scenario, if your GST turnover is less than 2 crores, you need not file a 9C. ITC as per 2B or IT or as per books to be reported in column 6B of GSTR 9. So in 6B, sir, when it is mentioned inward supplies other than imports and inward supplies liable to reverse charge, but includes services received from cess. So this would be as per your books of accounts. Obviously, your GSTR 3B and your books of accounts will match. Here, when you say 2B, is it like you're mentioning 3B, correct? GSTR 3B. Yeah. So obviously your 3B or as per your books of accounts. So here you have to mention what is your actual inward supplies, not what you had claimed in 3B, because on any which way there would be reconciliation later. If you see in table number 7 and table number 6, there would be reconciliation later. So as per books of accounts, what all it was required to be considered as a tax on inward supply, that needs to be mentioned here in 6B. So if you see table 6A, sir, total amount of ITC availed through form GSTR 3B. So that detail you have to mention here. In 6B, you have to mention inward supplies other than. So here they are not specifically mentioning about 3B. In 6B column, they are not mentioning about GSTR 3B. So entire inward supplies other than imports and inward supplies on which RCM is applicable, all the inward supplies would get mentioned here in 6B, sir. 6A, you have to mention ITC, which you have availed through form GSTR 3B. An excess input of 47 lakhs in 3B, and also excess output of 45 lakhs. But I rectified my output difference in one, but not in 3B. So your question is, you have an excess ITC of 47 lakhs in 3B and excess output of 45 lakhs. Okay, how, I mean, whether it is for a particular year, how can there be, I mean, can you just clarify your question? How can there be both the ITC as well as the excess output? Your query with proper figures to research at tvsca.com, that would be better, because in this um, uh, I mean, we need to work with figures. So if you can mail across your query, we will revert accordingly, and that would require some a bit more analysis on how much was the ITC, how much has been claimed. We need to see the returns as well. So if you can just mail your query to research at dvsca.com, we will certainly revert. Thank you, friends.